Let's talk about a strategy on how you can reduce the amount of money that you have due at closing. Remember, when you go to close in a new house, the amount of money that's due is going to be your down payment plus your closing cost. Don't forget about the closing cost. Now, you can work it out where the seller pays your closing cost. That's the best possible scenario. But if it doesn't and you have to pay the closing cost, here's how you can reduce the money that's due. It's very important. You got to understand what's going to be due. Of course, there's all the typical closing costs, but one of the big portions of the closing cost is the interest from the day that you close. Let's say you close on the 15th of the month. So the closing costs include interest from the day you close until the 1st of the month, and that's going to be collected as part of closing. And then for the month of April, your mortgage payment is zero. Your first payment is due May the 1st, and that payment includes all the interest for the month of April. So to reduce the amount of money to do at closing, very simple. Close at the very end of the month. If you ever talk to a closing attorney's office, they're going to tell you the end of the month is very busy, because if you close on the last day of the month, you pay 0 days of interest. The other possible scenario for you to do is close very early in the month. Close the 1st, the 2nd, or 3rd, up until the 5th. You can close, and you won't pay a full month of interest on that. We'll give you what's called an interest credit. So you get credit for those days that you didn't occupy the house. It's a great opportunity. I hope you understand how you can reduce the money that's due at closing. Closing costs are always one of the big hurdles. It's hard enough to save for the down payment, and I want to help you save in closing. If you like this information, like and follow for more.